respectively as on 31st December 23, and we feel very confident that the same would keep improving in the upcoming quarters and years on account of improved earnings, working capital efficiency, higher asset turns in both mobile and IT hardware segments. We continue to invest in our capacities and diversify into new product categories to support long-term growth opportunities with huge focus on quality, manufacturing excellence, and consistently meeting the needs of our principal customers and strengthen our position as a key player in the industry. Strong balance sheet, high liquidity, and adequate credit lines from banks enables us to direct growth capital swiftly and enables us to invest in the long-term development of a business for long-term value creation. Our foremost objective continues to be a part of India's long-term growth story and to ride the country's robust consumption narrative and make an India initiative to achieve industry-leading growth. Now I'll share with you the performance and the strategy in each of the segments going forward. Starting with Mobile and EMS division, revenues for the quarter were 3,214 crores, which is a growth of 251% year-on-year and 14% quarter-on-quarter. Operating profit was 104 crores, a growth of 215% year-on-year and 13% quarter-on-quarter, with an operating profit margin of 3.2%. In the first 9 months of this fiscal, we have already touched a significant milestone of manufacturing 11 million smartphones and 26 million feature phones. We have created an annual capacity of 30 million smartphones and 50 million feature phones across 4 plants in Noida. We are making more investments in this business in order to meet the increased order book in Motorola business, including a significant part which is going to be exported, and to meet the demand for some new large brands in pipeline. Production should commence in the next couple of months for one of the largest global brands which we have acquired, and for another customer which is again one of the largest global brands. It should commence within the next 4 to 6 months. Agreements with both the customers are in the final stages of closure, and we expect very decent volumes from these 2 new customers. Our ramp up in Xiaomi Smart business in the range of around 3 to 4 lakhs a month and then ramping up significantly has already started in a new facility in Noida. We expect the volumes to further build up starting April 24. So these are very, very large order wins, and we would be undoubtedly the largest phone manufacturer in the country. Consumer electronics revenues for the quarter was 929 crores, that is a value growth of almost 8%, with an operating profit of 32 crores and 3.4% of operating margin. We have rolled out India's first ODM-based Google TV solutions from Google in the quarter under review, and we're getting an encouraging response with some of the brands already taking a solution. We've also entered into partnership with Samsung for their Tizen operating system, which will be supplied for us to offer to other domestic brands and is expected to be rolled out by Q4, that is the current quarter of this fiscal. We've started manufacturing interactive flat panel display this quarter, and we have a good order book on this. We expect the margin of this business to be much superior to LED TV. As a part of our backward integration exercises, we have already started injection molding for televisions and also started manufacturing the LED bar for televisions. Home appliances, the revenue for the quarter was 288 crores, which is again a significant growth over the quarter last year, with an operating profit of 30 crores and operating margin of 10.4%. Our new state-of-the-art facility at Dehradun is now ready, and the mass production will be starting in a week's time. In line with our backward integration strategy, we have set up our own tool room, and most of the majority of our tools are being manufactured in-house now. Manufacturing for Bosch and Reliance in semi-automatic category and Panasonic, Lloyd and Reliance in fully automatic category will start in Q4 of financial year 24. Lighting. Revenue for the quarter was 187 crores with an operating profit margin of 7%. Apart from subdued consumer demand and increased competitive intensity, the reason for lower revenues year on year is mainly due to price erosion for the new DOB solutions, which is 35 to 40% lower as against the same period last year. We are on track to launch professional products by Q4 of the current financial year. New product introductions, specifically on ceiling lines, are also planned in the current quarter of the current fiscal. We're getting into backward integration for mechanicals to achieve better cost optimization. We are targeting to start this production of these mechanicals in Q1 of the next financial year. We've got some repeat orders for exports from our customers in Middle East, and we are also pursuing in other developed markets in the coming quarters. Next is the telecom and networking products. Revenues in this segment for the quarter under review was 182 crores. A new facility in Noida, which got operational in December 22, is now stabilized and now ramping up for various telecom products successfully. Mass production is now going on for telecom GPON ONTs, that's Wi-Fi 5 and Wi-Fi 6 routers, and Android set-top boxes. This is mainly for Airtel and the other largest mobile service operator. This is in partnership with very large global ODMs. We have also won very, very large orders from Airtel for 5G fixed wireless devices, which is currently in the NPI and a trial stage. And this is one of the largest global players, global ODM solution provider in the FWA category. We have also got large order from the Indian largest telco on set-top boxes and 5G CPE devices. These products are also going to be started in the Q4 of the current fiscal. The order book in this business is very good. Next is laptops and tablets. Dixon, through its 100% subsidiary Paget, is now a beneficiary under IT Hardware PLI 2 under the hybrid category, wherein we have committed an investment of 250 crores during the tenure of the scheme. We have already finalized business with Lenovo for manufacture of notebooks and tablets. NPI phase for tablets is completed and mass production will start in the current quarter. Notebooks we are expecting to start by August, September of next fiscal. Acer's business plans are also in discussions, which are going to increase significantly. Wearable and hearables, revenues for this segment was 101 crores with healthy operating margins. The festival sales in this particular category in Q3 was subdued, resulting in lower revenues. In this category also, we have deepened our level of manufacturing by setting up SMT for PCBA, which is going to be done in-house from the current quarter. Security surveillance systems. Dixon's 50% share of revenues for the quarter was 200 crores, which is very significant growth over last year. The new facility in Kupurthi is now getting stabilized, resulting in normalization of operating margin to 2.6%. We have further expanded our SMT capability by adding 2 more SMT lines. We're going to add more product categories like 4G camera and routers in this particular business. We're also looking at the possibility of setting up an injection molding shop. Rexon Dixon Electronics, it's a 40-60 joint venture with the Japanese company Rexon to manufacture inverter controller boards for air conditioners for Dixon. This JV achieved a revenue of 82 crores in Q3 with very healthy operating margins. We have a strong order book in this vertical. We've also achieved the CAPEX thresholds for 2 years and revenue thresholds for current fiscal under PLI. Refrigerators, we have created a capacity of 1.2 million direct cool refrigerators, which is almost 10% of India's requirement in the categories of 190 liters to 235 liters with multiple features and different star ratings. Production in this particular factory is already commenced. The trials are on. We're expecting some BS approvals, and the commercial production will start in next week to 10 days. We have already signed off agreements with some large Indian brands, and the trial runs for them are on. We will further be introducing glass door models and start developing 2-door frost-free models in this category. In addition to this, the company is also seriously pursuing PCB assembly and box build in the high-value addition industrial electronics sector. In this, the response has been good. We hope to conclude some good orders in a couple of quarters in this business. So I would like to stop now, and me and Saurabh are there to respond to your questions. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Ankur Sharma from HDFC Life. Please go ahead.
Thanks for your time as always. I had a couple of questions. One, to start off, was on the lighting side. And clearly lighting's been struggling for a while, and that's pretty much an industry-wide phenomena given the erosion in prices. But being one of the largest players, how do you really see this going forward? By when do you think prices bottom out? Because I understand volume growth been there, but that's completely been taken away by the price erosion. So is it like another quarter away, couple of quarters? How would you see this?
So, Ankur, lately I'm seeing that the price drop which was happening because of migration to the new technology of DOB has kind of bottomed out and stabilized. So I don't see this kind of erosion taking place in the coming quarters. However, the demand continues to be subdued on the consumer side. What our data points are showing that on the professional side and industrial side, the demand continues to be fairly robust. And also the consumer end solutions, that is the products like LED bulb, which was a major contributor to our revenues, is subdued and kind of declining. And the consumer demand is shifting more towards ceiling lights and downlighters. So that's what we are trying to do internally. We had set up an R&D almost a year back by taking in senior professionals from the industry. So our professional solutions of street light, industrial lights are being rolled out, and we start generating revenues from the next quarter. And also we have invested a lot for coming up with extremely good solutions for ceiling lights and downlighters. So that's also going to be rolled out shortly. And our new product category, which I had mentioned in my earlier earning call, was on the strips and ropes. That has already been rolled out. So those are the steps one has taken from Dixon side. But how soon it's going to recover, to be very candid, one has to wait and watch. But as far as the unit value decline is concerned, I think it's bottomed out, and these are the steps taken by us to get the business back on track.
Okay. And on exports, how big would that be right now? I understand that will be fairly small, right? But can this kind of offset some of this weakness on the B2C demand? Would that happen in next 1 or 2 quarters, or is still some time away?
So we are definitely seeing this phenomena called OOC out of China, and we are working on this opportunity. We feel that we are almost close of certain significant breakthroughs in the developed markets, but let's wait and watch. But what kind of revenues is going to offer, I'm not in a position to answer that question. First is to get those breakthroughs, and we feel that we are almost close to it. Second is to establish our credentials and deliver as per the large customers' demands, and then the volumes will come up. So I'm very sure it will come back on track, but take some time.
Okay, fair. So second, on the cell phone side, and I think you spoke about some 2 new large customer additions, if I heard you right, where you're working upon. Anything more you can talk about? Are these brands in India? Are these mostly brands outside India? Would you be making it for the Indian market? I don't know, whatever maybe you can share at this point.
So this is mainly for the Indian market. The first brand that we mentioned in our opening remarks wherein we are targeting the trials within February, March, and the commercial production to start in April. It's within the top 3-4 brands in India. And the other brand is a very, very large global brand, and that requires certain specialized lines. We are close to signing some documents, but that's going to take 4-5 months to start commercial production.
Right. Okay. And just if you could remind us, ramp up on Xiaomi, itel, Jio, how is that going? Any numbers you can share where you land up, say, this year and next year on some of these larger, even Motorola here has increased exports out of India. So some of these larger clients, how's the ramp up happening? I know the Xiaomi plants also started. If you could help us there as well.
So the ramp up in Motorola volumes is very significant, and almost 28 to 30% of what we're going to manufacture is going to be for exports to US market. For Xiaomi, the production has already started, and we are adding lines. We have won the RFQs for certain new models. So that ramp up is going to be significant. Month on month, the ramp up is happening. Jio, we are consistently producing for them the Bharat Jio phone, but that's more on the feature phone side. itel also, we are producing the feature phones. We feel that in a month's time, a significant production of the smartphones for them is going to start. And then we are talking about adding 2 new brands. One brand that I mentioned is going to happen hopefully by April, and the next brand should happen by August.
Got that. And just one last one on the...
I'm really sorry to interrupt, but
sure,
maybe rejoin the queue. As several participants waiting. Thank you. Before we take the next question, we request participants to please limit your questions to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. We take the next question from the line of Aditya Bhartia from Investec. Please go ahead.
Hi, good evening, sir. So my first question is, hi, sir. So my first question is on the mobile phone side. We have obviously started a few new facilities like that of Xiaomi, and we are also constructing a fairly large, if I remember, almost 1 million square feet kind of a facility. So how are we thinking about structuring this business? Would some part of the existing business be moving to a larger facility and we let go of some of the leased facilities? Or are we anticipating new business to be large enough to be filling in such a large capacity?
So at present, apart from our Samsung footprint, we have 3 footprints. We have 3 factories in Noida. And within these 3 factories in Noida, we are creating a capacity of almost 30 million units. Smartphones only I'm talking about. And parallelly, we are building this 860,000 square feet factory in Sector 151 in Noida, which is going to take 2.5 years. And also please appreciate that we are an active participant in ITPLI 2, and that is production of notebooks and also tablets. So that business is also going to ramp up. At present, it's going to be done in a Sector 68 factory. And as the volumes ramp up, and let's see, because if we're doing 30, 35, 40 million phones, it's a very large number. We'll have to take a call that how much of it is going to be shifted to the new, our own footprint, or we can secure some new business. Let's see. There is time for that. But at present, that's the way to structure.
Understood. That's helpful, sir. My second question is on performance this quarter for segments other than mobiles, which appears to be a little soft. Lighting, obviously, you mentioned some of the challenges. But even on the TV side, given that we had a slightly delayed Diwali, maybe one could have expected slightly stronger volumes. So is it that the market is going through a fairly stark slowdown, or is there something more to it? And also a related question, in categories like, let's say, wearables or IT products, which are just in the nascent stages, this quarter has been a bit weak. So what are you seeing on that front? Thanks.
So, let me just share with you the numbers. See, as far as LED TV is concerned, we have grown 8% in value over the same quarter last year, but there is some decline in the volumes. As far as semi-automatic washing machine is concerned, we have grown by 35%. As far as the smartphones and feature phones, the numbers have grown by, in the case of a smartphone, by almost 246%, in feature phones by 1300%. As far as wearables is concerned, we have grown by 22%. As far as CCTV is concerned, year on year, we have grown by 89%. In DVR, we have grown by 81%. In our telecom devices, because it was a small base, it's a significant growth. So what I'm putting across here is, of course, the growth, the main growth trigger has been mobile, but all the other verticals we have grown, except for lighting. And you know that the demand and the consumption side in India in this particular category has been rather subdued, but we have grown.
So on the wearable side and IT hardware side, I was actually looking more from a sequential basis versus quarter two, given that these businesses are on a ramp-up mode. Like wearables, we had seen a pretty decent growth in second quarter, also because I think we started consolidating 100% of revenues. But from there, we have seen a bit of a dip. So I just wanted to understand that.
I'll compare quarter on quarter. Please appreciate that in Q2, the build-up was for Diwali.
Okay. So there's a fair bit of seasonality even in wearables and wearables.
Yeah, absolutely.
Sure. Understood.
Generally, Aditya, basically, till Diwali, the sales are good, and then there's always inventory in the channel, which takes time to liquidate. So that always happens in wearables category as well, along with TVs and washing machines. But in washing machine, they've still grown year on year, clearly because we have been able to take higher share of wallet, and we have also been able to add more customers in this category.
So just to share with you the numbers, in semi-automatic washing machines, I know that the overall demand has not been that buoyant, but we have grown from 3.1 lakhs to 4.2 lakhs.
Perfect. Great, sir. Thank you so much.
Thank you, sir.
Thank you. The next question is from the line of Deepak Krishnan from Kotak. Please go ahead.
Hi, sir. Thank you for the opportunity. I just wanted to check on the Jio Bharat phone and the feature phone development that you indicated. Do you kind of see that volume sustaining beyond this year, or do you kind of look at that as a one-time revenue addition for this particular year? What are your viewpoints on this?
The Jio Bharat is going to ramp down in a couple of months.
Sure. And are additional other customers, especially the Xiaomi ramp-up and the Itel ramp-up, should more than help us offset any impact in that? That's how we are...
New customers. Okay.
Sure, sir. And maybe any viewpoint on how are we looking at mobile growth for the next couple of years? Any data points that you can share in terms of, obviously, we indicated new customer addition, but either in volume or value terms, how you kind of see this business scaling up?
So undoubtedly, it's going to be a largest contributor to our growth. See, we feel that the outsourcing opportunity in mobile, out of 150 odd million mobile smartphones sold in India, is almost 85 to 90 million. And we feel that in a couple of years, we should at least be at 35-40% of that market. So it's going to be a very large revenue contributor.
Sure, sir. Those are my questions, and thank you for the opportunity.
Thank you.
Thank you. The next question is from the line of Renu Baid Pugalia from IIFL Securities. Please go ahead.
Yeah, hi. Good evening, sir, and thanks for the opportunity. So my first question is, how should we look at the mobile phone business from a profitability perspective? Earlier, you had mentioned that this business should be drawing anywhere between 2.5 to 3% margin over medium term. So this quarter, we would have seen initial startup costs for new factories for Xiaomi, ramp up in Moto, plus there are capex underway for other factories as well. If we take the next 12 months perspective, do you think margins in mobiles could take a near-term knock, or ramp up in the existing brands and investments in new brands should be able to take care of the margins by naturally offsetting each other?
So when we are looking at customer mix, the model mix, and we have done and prepared the financial metrics internally, we see the last quarter we have generated an operating margin of 3.2%. I feel we should be in a similar range. There will not be any negative impact. If possible, there might be 10-20 basis improvement.
Sure. And in terms of the backward integration with respect to mobile phone components, how is that placed for the next 12-15 months?
So we are looking very seriously now at the vertical integration play in mobiles, and are in dialogue and deep study with some of the largest players in this domain. We feel now is a time for Dixon, because we will be having a large mass of mobile and large share in this business, to vertically integrate. This is happening at present at conceptualization and study stage. Let's see how is the opportunity looking. But please be rest assured that we in Dixon are very deeply diving into this.
Right. And so just to recap, when we first entered the mobile segment, we had incubated a small team of R&D which was based out of China to work on potential ODM capabilities as well. So is that team still working on, or that ODM plan, or those plans to build those ODM capabilities in mobile phones over a 3 to 5 year period? Is that plan still intact, or there have been changes in the business strategy given the sharp volume ramp up that we have seen in the recent quarters?
So, that is on a back burner now. Complete, because the opportunities that has come into our lap are very, very huge. And the whole bandwidth of the team is going to be consumed in executing that. And also, a lot of work has to be done on industrial engineering, robotics, NPIs, automation, increasing the productivity levels, yield levels to the best in China. And also the opportunity one feels is going to be on the vertical integration side. And so that's the reason ODM thing has been put on a back burner, at least for the time being.
Got it. And lastly, you did mention briefly about plans to explore entry in PCBA for industrial applications. Can you share some insights in terms of what applications are we exploring on the PCBA side? Would this be more domestic focused foray in pure EMS, or it would be export oriented portfolio for us?
So what we are looking at, because we feel that we have adequate capability on the EMS side for industrial electronics, we are exploring the opportunities in a higher value-added business, mainly for global markets. We have built up a small team. We have dedicated some resources. Some RFQs are with us. In fact, with some customers, advanced stages of discussions are happening. So let's see how it pans out. But definitely, there will be a business revenue stream created in the EMS side, which is having a larger value addition.
Got it. Thanks much and best wishes, sir. Thank you.
Thank you. The next question is from the line of Keyur Pandya from ICICI Prudential. Please go ahead.
Thank you for the opportunity. Hi, team. First question on the mobile side. I think since now the Xiaomi plant is on stream, earlier you have mentioned about 0.5 million kind of run rate on a monthly basis. and around 1 million for the itel smartphone. So what kind of timeline do we expect to reach this, or have we revised upward, downward? Any update on this? That is first question.
So we're working towards it. It's very difficult to give a timeline, but we're working towards it, and we're confident these numbers will be achieved.
Right now, it would be since I know it's still early stage since the plant coming on stream. So right now, what would be the level of production? Any 100 that you can share, or any expected 100 for Q4?
100K for Xiaomi.
Okay, understood. Secondly, on the laptop side, just more thoughts on existing opportunity from the existing customer, and any timeline that you can share for the start of the production and ramp-up timelines.
So the new contracts for notebook laptops that we have signed with some of the large global brands, we are targeting to start production by August, September.
Okay. And for the, just a one follow-up. So existing volumes are totally imported. So basically, what is the size of opportunity, and what kind of volumes can we import substitute for them? If you can share that.
Please appreciate the IT products market in India is almost $10 billion, and is largely being serviced through imports. So first, the Indian EMS companies like ours have to establish their credentials, because laptop manufacturing, it requires a different skill set. It requires a different level of engineering expertise. Also, there is a nudge from the government for all the global brands to start manufacturing locally. But all this has to align. First, the global brands have to be convinced about the capabilities in India. So it will be slightly difficult to give a timeline, but I think a very substantial production, once we have proven our credentials, is going to shift to India over the next 2 to 3 years. Yeah.
Understood. Let me get that in the queue. All the best. Thank you.
Thank you. The next question is from the line of Abhishek from DSP Mutual Fund. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. For just on the EMS part of the business, so once you probably get a clientele and then will you start incurring capex, so one should assume 12 to 15 months kind of a lead time from the time you actually sign a contract with a customer, or how does it work? If you can help us with the timelines.
So we have taken an internal strategic call to pursue this. We have built up a small team which has started working towards it. We have some very significant RFQs. We have some because a lot of our SMT capacity is fungible. So we can always utilize our surplus capacity for it and create a footprint. How much time it's going to take, it's very difficult to say because it's a new business for us. But we are absolutely committed to it.
Okay. So, sir, only from the perspective that once you get a firm contract from a client, you can use your existing capacity itself to produce is what the understanding is. So, lead time for putting up a factory should not be very high. Is that a right understanding?
Not at all. You see, the SMT lines are basically the same. But when we are looking at industrial electronics and when we are looking at value-added industrial electronics, we require a different kind of clean room capabilities.
Sure.
Which can be in 6 to 8 months.
Okay. Got that. And sir, just in terms of Xiaomi also, your plant is largely ready, but in terms of product approvals and other things, are those in place? And how should one look at in terms of the ramp up that you have kind of largely guided for? In terms of further approvals and product approvals, how should one look at in terms of what are the things which you still need to cross in terms of to be able to get to that ramp up?
So there is a prescribed SOP for product approval. It takes around a couple of months for the product to get approved after the trials have taken place. The first couple of models have already been approved and the execution is taking place there. And other product mix pipeline is very clearly established. So I think starting March, April, month on month, we feel that there should be a increase and ramp up will happen.
Okay, got that. And so just one last thing in terms of the competitive intensity, sorry, both in television and lighting, how are you seeing that? Is there an increase in competitive intensity or is it just the end demand which is kind of weak? Any thoughts on these two segments? Thanks.
So on the television side, the competitive intensity is there, but I think we are still in largely a secure position. And we are working with some of our customers who are getting a larger share of their wallet. The response is positive. So my sense is that in the next fiscal, we should see a volume growth also. And also we've got into the new category of IFPD, which is a high value product. And I think our order book there should be decent. But the competitive intensity definitely is there. But to share more deeply into this, I don't see the competitive intensity from domestic EMS players. I see largely from a global player. As far as lighting industry is concerned, the competitive intensity is very, very high, particularly on the consumer side. On the professional side, that the product portfolio that we are launching now, the competitive intensity is significantly lower. So that's the way it stands.
Got it, sir. Thank you so much for answering my questions. Wish you all the best. Thank you.
Thank you. The next question is from the line of Girish from Morgan Stanley. Please go ahead.
Yeah, thanks, Mr. Lal, for the opportunity. I have 3 questions. So on mobile, if you can help us on volumes for FY25, basis what you understand. You mentioned the 2 customers. So the base business of Motorola and ITEL, the volumes that you expect in FY25, and how should we think about the 2 customers in terms of volumes, how much they would be?
Well, it's slightly premature to give the volumes, but I feel that all the opportunities which we are pursuing, we are almost close to finalizing them. We should be somewhere around 25 million.
Okay. And just in terms of IT hardware, do we have a customer win for both tablets as well as laptop, or what's the kind of run rate that on revenue and volumes we should expect for IT hardware for FY25?
So again, I'm not in a position to share that number because, tablets, the commercial production is going to start in a couple of months. The trials have already happened. For notebooks, it's going to start by August, September. It's a complex line. So for me to share the numbers of these for 24-25 is slightly difficult.
Okay. And then in terms of capex, what will be our total capex that we end this year, and next year what are we penciling in?
So the capex that we have incurred till now is around 440 crores. So I think we should close it around 200 odd crores.
Okay. And next year, how much should we think through on FY25?
Girish, I haven't budgeted the numbers for next year, but probably my it should be a similar level of 400 crores plus kind of a number, but we haven't budgeted. So the next couple of months we will have a better idea on the budgets.
Because these opportunities are still in the pipeline. But one feels that the number that Saurabh is mentioning, it should be in a similar range.
Okay. Thank you.
Thank you. The next question is from the line of Pulkit from Goldman Sachs. Please go ahead.
So thank you for taking my question. So this announcement that came in the morning of reduction in import duty, do you think this is going to delay the indigenization of components for us, which in a way works for us that more assemblies could happen in India but the whole backward integration plans basically get further postponed. How are you thinking about it from a medium-term perspective for the company?
You see, the domain that we are evaluating for mobile backward integration is primarily in modules and display. So I still have to study the notification. But my sense is that on display, there were two sets of tariffs. One was 10% and another one was 15%. And now it is 10%, that's what I understand. But one has to study the notification deeply. So my strong conviction is that there is a strong case for setting up an indigenous infrastructure for display at 10% arbitrage also.
Because when you have a large scale, then even a 10% arbitrage at the scale level we are talking about, the capacities that we are putting in would lead to a lot of arbitrage.
Understood, sir. Yeah, I understand it's a little premature right now. One follow-up question on the capex number. These numbers that you are sharing for next year also approximately which you gave, I'm assuming doesn't include any estimation or any backward integration capex because those would be numbers running into a few thousand crore. Is that right?
If that happens, this is a different order.
Sure. Okay, that's it from my side, sir. Thank you.
Thank you. The next question is from the line of Natasha Jain from Nirmal Bang. Please go ahead.
Yeah, hi, good evening, sir, and thank you for the opportunity. So my first question is on the IT hardware PLI. So last time that we spoke, I believe you clarified that this PLI can be passed on from the main beneficiary to an EMS player, along with a capex sharing model. Now, have we received any such job work for other brands apart from Lenovo and Acer?
So Natasha, our approval under IT PLI 2 is under domestic hybrid category, wherein we have committed a capex of 250 crores and we are committed to make that capex. Two large global brands we have already acquired as our customers. We are in discussions with some other very large global brands. So let's see how it pans out. But that's the status as of now.
So, but I'm assuming that these large brands that you're talking about have been an awardee in the PLI, right? They are going to pass on that business to you.
So please.
So Natasha, your understanding is right. So awardees can be a branded company, but they can, the way the whole PLI is structured is that they can work with an EMS company, and EMS company can get an award contract from them and then get the conversion charges. So PLI can be with the brand owners who have got all the beneficiaries, but for an EMS player like us, they can be a play on the conversion charges and the volumes and the revenues.
Understood. Thank you so much, Saurabh. That's all from my end.
Thank you.
Thank you. The next question is from the line of Indrajit Agarwal from CLSA. Please go ahead. Indrajit Agarwal, you may go ahead with the question.
Hi, can you hear me now?
Yes, please go ahead.
Okay, I have a question on the lighting segment. So you mentioned the competitive intensity remains high. Is it from other contract manufacturers or insourcing by the brand is also putting a dent on the overall manufacturing ecosystem? And second, on those lines, the decline that we are seeing, is it also because of market share loss or we are largely in line with industry?
So the comparative intensity that I referred to was largely from the other contract manufacturers. And I also feel that there would be some loss of market share for us in the consumer side to the other contract manufacturers.
So do you think the worst is over on this, or going ahead there could be some more loss of market share in the next few quarters?
Well, I feel confident now when I look at the numbers and the strategy of my team that we will be able to hold our ground. One feels so. And in fact, in some of the SKUs like battens, we're going to be increasing our market share significantly, and also in downlighters.
All right. Thank you. That's all from my side.
Thank you. The next question is from the line of Srinidhi Karlekar from HSBC. Please go ahead.
Yeah, hi. Thank you for the opportunity. Sir, one question on Motorola export opportunity. May I ask how much is Motorola's non-India volumes currently on an annualized basis, and how much of that is currently serviced by Dixon?
So 100% of Motorola, whether for domestic or for global markets, is done by Dixon. The present volume is almost 22% of what we manufacture and we exported. I feel in coming quarters, this volume is going to, as a percentage, will increase to almost 30%.
So you mean 22% of Motorola's global volume Dixon is doing, that can go up to 30?
22% of what we are producing. And as far as the total volume is concerned, this year we should be doing almost 15% of what Motorola does globally, which I feel that in the coming year should increase to 18 to 20%. That of what Motorola does globally will be done by Dixon.
Right. So just wanted to know that number actually, like how much is Motorola's volume in terms of million units, and how much is India and how much is non-India?
So, yeah, one will have to check those numbers, but I think the Motorola global volumes are almost 40 to 45 million.
Yeah. Right. And so where do we compete here? Like which factories and how much, like what are the drivers which decide the allocations here?
So Motorola has three footprints. One is their factory in Wuhan. Second is their factory in Manaus in Brazil. And the third factory is Dixon.
Right. And so question is more, so what really drives allocation between the factories? Is it RFQ based and the pricing gets like bid out and then you get the opportunity? So just some color on that aspect would be really helpful.
Yeah, so it's purely on the commercials and also the capability and capacity on deliverables, because particularly when we're looking at the global, so whatever is being sold in India, it's a no-brainer, is going to be manufactured in Dixon. But when we're looking at global markets, the expectations on specifications and quality and delivery are also of a different order. A very huge element of flexibility is required. So keeping all those contours in front of them, they take a call. But I can see that India's share and Dixon share for the global market significantly increasing.
Right. And last one, if I may I know how much is the PLI incentive that was booked during the quarter?
Yeah, so Shini, yeah. So mobile, we booked a incentive of almost 17 odd crores, 16.5 crores in this quarter.
This quarter. Okay. Thank you, sir. And all the very best.
Thank you.
Thank you. The next question is from Bharat Shah from ASK Investment Managers. Please go ahead.
Yeah, good evening, Tulji and Saurabh.
Good evening, sir. Good evening, Bharatji.
Good evening. Over last 2 years, if we see, it has been a bit of bittersweet kind of alternating situation. More bitter in the earlier part and relatively more sweet in the now more recent past. And we all learn the perils of forecasting. In investing, we learn it all the time of the perils of forecasting and how badly all of us can go wrong. But you still have a right to judge and forecast the future. So with all that is flown under the bridge over a period of time, especially last 2 years or so, how strongly now we feel about the future, because we too have gone through our own learning curve and experiences and some of the unanticipated issues that may have cropped up. So with all that behind, we having learned more, business having received some positive tailwinds in the recent past, how do we view the future now, both in terms of our competitive strength, the growth, the opportunity, and of course the margins and profitability?
So Bharatji, like always, you have asked a very deep question. So since the time when we got listed in 2017, we have grown 10x in our revenues and also 8x in our profitability. And if you recall, the total equity that we have raised at the time of IPO was only 60 crores. And practically there is no debt in the company. So from that kind of capital allocation, this kind of growth has happened. The balance sheet of your company is extremely strong with a return on capital employed of 35% plus. Without sounding pompous, this would be one of the best in our industry. We have always tried our best to identify the large opportunity pools in front of us. Sometimes to get business into the opportunity pools takes time. And then God has been kind, our stakeholders are our good well-wishers, that we have been able to acquire large business in the largest of opportunities in this pool that is in mobiles. Because all the other opportunities combined is half the size of the opportunity pool in mobiles. And we feel that we're going to be almost at 40-45% of the outsourcing opportunity in mobiles. So that is a big thing for us. And also, we try to hold on to our pole positions because I think in the other verticals we are almost 3-4x except lighting of what our competition is. We try to run a very lean organization. We try to run a very tight balance sheet. We're extremely cautious on our capital allocations. Sometimes they may not have gone absolutely right. And sometimes we have not delivered as per what the markets were expecting on account of various factors like pandemic or global slowdown, which were beyond our controls. Now, we feel that we are on a strong footing. I think we're very fortunate, and that's our biggest strength, that we have a very, very solid team, an extremely committed team. So we feel that the growth journey with a strong balance sheet will carry on. We have the capability and bandwidth to execute this. So hopefully we're going to come up to your expectations, sir. That's what I feel, and I'm saying that from an element of confidence. But this is life, this is business. At times the things don't work out as per what we prescribe. But from Dixon's perspective, let me assure you of one thing, that we'll always be transparent and candid. In what we foresee, that's what we share. So that's how I would like to respond to your question, Bharata.
No, there has been no doubt about the quality of growth and the transparency and candidness with which always issues have been dealt with, not just in good times, but in difficult times as well. So on that, 11 marks out of 10. There is no question about it. The quality of the growth has been sound, it has been disciplined, and it has remained focused on the longer end of the strategic agenda. But what I will, and I understand that the mobile phone is a huge opportunity, and you have good reasons to believe that you'll have lion's share of outsourcing in mobile phones. So that should put you in a good state to grow at a meaningful pace. But given all of that, given the fact that manufacturing ecosystem is getting more mature, having acquired scale, different experiences with the customers and others have been gone through, and as I mentioned, some challenges have been gone through. Do we now believe something topically sometime will do well, something may not do well, and that is the way business would be always, as you correctly pointed out. But do we say approximately We should be able to quadruple our business in, say, 4 to 5 years' time, which is roughly like 35 to 40% kind of a growth rate, depending upon whether 5 years or 4 years. We quadruple. Is that a realistic possibility, or you think that's too high?
Well, don't hold me onto it, but I definitely feel that it's a realistic possibility. I'm not giving any forecast or any numbers, but I think internally we are excited about this opportunity, and we feel that that is a reality. Now, in which direction it goes, what challenges, what timeline, we'll all work hard to overcome them. But definitely the opportunity and the growth rate that you're mentioning is in front of us.
Sure. Thank you, Atulji. That's good to know. All the very best wishes. And just one last thing. I suppose with the margins held intact or slightly better rather than any adversity on that margin front, right?
Margins, Balaji, because large growth is coming from EMS prescriptive business, wherein margins globally and in India are in the similar range, are going to be in this range only.
Right. Right. Thank you, Atulji. All the very best.
Thank you, sir.
Thank you. The next question is from the line of Vinod from BOB Capital. Please go ahead.
Yeah, thanks for the opportunity. Atulji, I think my question is similar to what Bharat asked just now, probably but more direct. I think one of the key hallmarks of Dixon's business model has been the high asset turns, and which has actually led to high ROCs. Now, when you're talking of vertical integration in mobile business, do you see any of these parameters getting impacted going forward?
So, I think it will be a good blend. In fact, the asset turns, because the capacity utilization in a prescriptive EMS business is going to increase, asset turns are going to improve. ROCs are going to further improve. Now, vertical integration, when we are talking about, one, the balance sheet can approve, can execute it, can afford it. And second, it further helps us in enhancing the stickiness with the customer. And also, it helps us in sustaining and expanding our margin. So please be rest assured the capital allocation, the way it's going to be done, is going to be very prudent. We are not going absolutely outlandish on that. And it will be a correct mix.
Okay. Thanks a lot, Atulji. Thanks.
Thank you. We'll take that as the last question. I would now like to hand the conference back to Ms. Bhumika Nair for closing comments.
Yes, thank you everyone for attending the call, and particularly the management for giving us the opportunity to host the call. Wishing you all the very best. Sir, any closing remarks from your end?
Thank you, Bhumika. Thanks for the call, and thanks for all the participants. Really grateful to you for sparing your time and giving your very, very valuable inputs. Thank you so much.
Thank you so much. Thank you very much.
Thank you very much. On behalf of DAM Capital Advisors Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect the lines.
All the best.